Dogecoin surges as Ether zooms 8%, sparking bullish reversal for Memecoins. The breakout now sets up a clean continuation zone, provided bulls defend the mid-range pivot they just reclaimed. Dogecoin finally forced a resolve on its multi-session compression, punching above 15 cents on a volume-backed breakout that signaled the first real momentum shift in days as Ether $3.16.26 zoomed 8%. The move came as targeted buying hit the Memecoin complex while the broader market rallied, giving Doge relative strength into the close. The breakout now sets up a clean continuation zone, provided bulls defend the mid-range pivot they just reclaimed. Doge initiated its breakout at 1500 hours Greenwich Mean Time, ripping through resistance at $0.1424. Volume peaked at $1.75 billion during the 1600 hours hour as price tagged $0.1522. Support formed at $0.1463 after initial acceleration, validating the breakout structure. Relative strength flowed into Doge even as volume cooled, with price still printing higher lows. No token-specific catalysts, the move aligned with selective risk-on flows in memecoin majors. Broader crypto markets saw synchronized relief buying as CD5 broke above near-term resistance. Traders rotated into high-beta assets after weekend volatility stabilized. ETF headlines remain largely Bitcoin/Ethereum focused, leaving Doge flows primarily technical and positioning-driven. Break above descending trendline confirms reversal of short-term bearish structure. Consolidation band formed at $0.1509 to $0.1513 following a 1.7% pullback from local highs. Key breakout level now $0.1550, with psychological $0.1500 acting as pivot support. Stack sits at $0.1463 and deeper at $0.1424. Any breach risks invalidating the setup. Total session range expanded to $0.0132. 8.7%, consistent with early-stage trend change. If bulls can push a clean retest and hold above the $0.1500 pivot, whether accumulation reappears on any dip toward $0.1463. Volume behavior. A second expansion phase is required to challenge $0.1550. Failure back into the descending trendline risks trapping late breakout chasers.